Dow Inc. has started trading on the New York Stock Exchange. It is one of the best performers right now. In fact, up more than 5%. The company officially spun off from DowDupont yesterday. We're joined now by CEO of Dow, live from the floor of the NYSE, Jim Fitterling. And congratulations, Jim. After 34 years at the company, you're now CEO of Dow. And shares are doing very well in their first day of trading. However, there are some actual and some potential headwinds ahead of you, not least the fact that DowDupont announced last week that there'd be $100 million less earned in Q1 than previously forecast. Is that still the plan? What does Q2 look like?
Thank you for having me. I think as we look forward at the economy, we ended the year at a kind of a slow spot with China slowing down. And first quarter was a little bit of a transition. We're coming out of that now. But as we look forward, there's actually good momentum into next year. Supply-demand balances for our chains look good. Oil price firming helps. And as China demand picks back up, which it usually does in second and third quarter, that should help us build momentum.
The World Trade Organization just came out today and said that world merchandise trade growth will slow to 2.6% this year, 3% next year. That's quite the slowdown. How are you navigating these slower global growth waters?
Well, as a global company, we sell in many markets around the world, and certainly some high-ticket items have slowed down, like automobile sales, and you see construction slowing down, and that impacts some of our infrastructure business. But we also sell about 70% of what we make into consumer products, and so the consumer goods and the durables and some of the consumer everyday items have actually held up very, very well, and they typically do during a slowdown. So I think as China comes back, you're going to see those numbers pick up.
What is your forecast for China growth?
I think as we looked at it, about 6% this year for China growth, and depending on market segment, could be a little bit different than that.
And then how much are U.S. trade tensions with China, particularly tariffs, which may escalate, contributing to the plastics decline?
Well, I think plastics is a growing marketplace. You know, all plastics is about a 400 million ton market, and it's doubled in the last decade, driven largely by sustainability factors. Certainly we're working on some issues with plastic waste, but I think those are manageable in the grand scheme of things.
Some of what you just mentioned, the plastics waste and efforts on the part of states and also federally to minimize that single-use plastic ban coming in New York just this week, for example, will impact your business. Now, that's just 4% of your business, but how much are you allowing for more regulation to impact your business and margins going forward?
Some of the plastics that are used in areas like straws and grocery bags are not big markets for us. But I think in general, if you look at the total demand in plastics there, it's not a huge amount of product. Remember, plastics go into a lot of durable goods as well. And so things like automobiles, things like consumer electronics command a lot of plastics. So as we look at it, people are focusing on things that they think are nuisances, nuisance bans, and trying to send a message about the waste issue. I think if you tackle the waste issue, there's no need to really ban these materials. You got to get people into a better mindset from a consumer behavior standpoint of actually disposing of these products, not throwing them in the trash, but disposing of them and putting them into recycle, into circular economy projects. And I think that's a better alternative than banning.
Well, on polyethylene pricing, you have tried to raise prices in each month of the first quarter, not so successfully. How do you manage to continue to raise prices or just to raise them from here?
What happened at the end of 2018 as oil moved down 40%, that compressed the margins obviously around the world. And then as China literally stayed out of the market the last 2 weeks of the year, there was some destocking that happened. In the first quarter, what we see is that prices have stabilized and the volumes are starting to come back. But we guided a little bit lower in the first quarter, equivalent of about 1 cent per pound on polyethylene, which is not a big number. But I think to show the shareholders transparency of what we could see coming. As oil continues to be constructive, typically that helps prices move, and as demand comes back in China and we hit seasonal second and third quarter demand, that's our strongest quarters, then I think you're going to see pricing be more constructive.
Now, Quinn talks about a so-called cultural metamorphosis at Dow, and that'll be thanks to you, Jim, and part of that is to do with cost cutting. What what do you anticipate you'll be able to cut costs to?
This year we have another 500 million of synergies that are still to come out of the DowDupont deal. And we have about 300 million of stranded costs that will come out as we separate out, Corteva and DuPont separates out. So about 75% of those two numbers will come out this year and the other 25% next year. That will help us, obviously, give us a tailwind. But I think beyond cost cutting, the beauty of what we've done here is create a more focused company. 3 market verticals, packaging, infrastructure, and consumer goods, 6 global businesses, and they all have a very similar business model. So with that allows us to really streamline inside the company. We can digitalize the way we serve customers. We can make it more convenient. We can be more easy, more enjoyable, more effective to do business with them. We can take a lot of costs out of our supply chains. We can run our plants more reliably and efficiently. And that focus, I think, is what's going to enable us to be much more productive and really convert more of our operating EBITDA to cash flow. And that was what's going to help us pay that nice dividend to the shareholders.
Yeah, you're targeting 5% plus, right, Jim?
Well, we're targeting to give back 45% of operating net income through the cycle as dividend and have 20% of operating net income available for share buybacks. So as we launch, we put a $2.1 billion dividend out there. And at today's prices, that's about a 5% yield. That's a pretty small group of companies that can do that. We believe that's a sustainable dividend, and that also gives us room as we grow this company to have the ability to give more back to the shareholders.
And I know that you're avoiding major mergers, but you are looking for incremental investments, although you will be taking investment down a little bit. Let me ask you about Saudi Aramco and its plan to sell some of its majority stake in Sadara, which is a joint venture with you. Might you increase your Sadara stake? What will happen there?
You know, we're not having any discussions right now about increasing our Sadara stake. And I think as Saudi Aramco, which is a great partner, works on what they're going to do with the SABIC acquisition, then at the right time we'll get into discussions with them about what the future of Sadara is. Sadara is a great asset. It's operating exceptionally well. We're moving into the phase where this year will be the first full year of everything in operation. So we're working very hard to get it on a sustainable financial footing, and that gives us a lot of options to discuss with Aramco. And
then, Jim, just in terms of projections, obviously you have to project for a stronger dollar. What are you looking at in terms of that projection? What do you see the dollar trading at, and potentially oil as well, and natural gas?
I'm sorry, I couldn't hear your comment about production. I heard production, but I couldn't hear the
projections
rest.
For the US dollar, what do you anticipate it will be trading at, and how will it impact your business?
Obviously, we make a lot of product and we export a lot from the United States, so a lower dollar really helps with the exports. But remember, we're a diversified company, so we've got about 35% of our business in Europe. We've got about 30% in Asia Pacific. We've got a big footprint here, Latin America, Canada. So as dollar moves, we also get benefits in other regions. As the euro comes down, it benefits our European currency. So we're very diversified in that perspective.